All right, guys, keep that round of applause going for our next presentation. It is my pleasure to bring onto the stage Senior Research Analyst at Piper Sandler, Michael Lavery. Come on. Michael Lavery, everyone. Give it up.
Thank you, and good morning, everybody. I'm the Senior Research Analyst covering cannabis at Piper. Have been covering the space almost 3 years now, launched at the beginning of 2019, so we've seen quite a few different versions of the industry and some ups and downs, but the message I hope to kind of give today is just some of where I think we're heading and who's probably best positioned to win. Let's see. Is this the... Stating the kind of obvious, the U.S. market is certainly significant. We estimate it could be 115 billion. Last year, it was around 17.5. Obviously, the forward look depends on things like broader legalization, both across other states, and our sort of blue sky scenario is also at the federal level. But importantly, we see growth still going on, even in sort of quote unquote mature states like a Colorado or Oregon that have been at this now for quite some time. They're still running up 10-15%, a little bit more last year, probably with some COVID help, stimulus or time at home. But we think the federal regulatory change is the real key catalyst to watch. We also try to keep our eye on pricing and what that could do for the sales impact. Obviously, the legalization is more of a legal volume driver. Pricing obviously could go up or down. So, our default assumption is usually something more like steady, but we'll touch on that again a little more in just a bit. So it's the regulatory environment after legalization that also could have an impact. Not exactly clear where that goes. We'll come back to that as well. But as far as how we get there, I think the Georgia runoffs in the early part of the year got everybody all excited. Maybe forgetting our basic government civics class, that the Senate, at least for the moment, still operates where it needs 60 votes for something like this. There's always the possibility of something like an executive order. There's actually some senators now pressing the administration for just that. But it hasn't shown momentum there. People can chest thump and make noise. Doesn't really mean anything will happen. So we'll watch it either way. But at the moment, it looks like there's more likely to be more modest progress. Senators Tester and Shaheen from Montana and New Hampshire, even on the Democratic side, have been publicly unsupportive of things like Schumer's bill and full legalization. And so it's clearly something that might be a little further off than some people would like to think. It does also have some interesting components of the bill Schumer proposed, including having things like regulation from the FDA, the ATF or the TTB. One thing we haven't dug into quite enough yet, but the FDA really is a pretty heavy factor. If anybody's followed anything with CBD, you know that the drug Epidiolex is an FDA-approved drug for epilepsy that has been a massive thorn in the side of how that otherwise legal product has been trying to get rolled out. There's a THC product called Marinol that's also FDA-approved by a small, little bit random pharmaceutical company. So that could be extremely complicated in ways that I don't think people have really unpacked yet. Like I said, and it mentions it at the bottom of this slide, I think the more likely path near term is some incremental reform, even though Schumer's been pretty dismissive of that. It does have bipartisan support, and I think it's still important, especially when you look at some of these social equity initiatives and trying to get these businesses up and running for often low-income applicants who need access to banking. And so we'll see where that goes, but it does look like there's some room for momentum, at least on that. Back to the pricing piece. Interestingly now, it's branding that often drives pricing power. I cover some consumer staples companies, food and tobacco specifically. And we see this. The premium price products are the ones with the brands, the equity that matters, the marketing behind that to support it. In this space now, it's really scarcity that's driving the value, and we see that in every market. Canadian oversupply has driven some price compression there. There's definitely been more segmentation between premium and value brands. Value brands have had a lot of momentum over the last year and a half or two. But interestingly, premium, super premium, single strain flower still has pricing, is priced accordingly and has support. It is also relatively scarce. That's part of it, but it's arguably a better product, more kind of time consuming or difficult to make. In the U.S., it's not as product specific in many markets just yet. It's driven so much by the licensing arrangement, and it's no secret that the MSOs heavily favor these limited license markets, primarily towards the East Coast. The more sort of free-for-all ones without caps still have, like we talked about Colorado and Oregon just a minute ago, still have good sales momentum and growth, but have really had less, a tougher margin profile because the pricing is lower. The flip side is that lower pricing does tend to increase the competition again. It provides better competition and increases the market share gains, if you want to call it that, relative to illicit trade or from illicit trade. So there's a category benefit that comes with that. But, in California this year, we're seeing, some pretty intense price pressure recently. They've issued since December 22% increase in licenses, while at the same time you're seeing the existing license holders increase their yields in part by, managing the indoor conditions to get 2 harvest cycles and different things that, are using the same canopy or footprint and license to put out more product. Quick look at how some of these states compare. There's technically maybe a fifth bucket of Connecticut's kind of murky implied limits, but here's sort of the free-for-all states at the top, the more restrictive ones in terms of number of licensees and the number of licenses they can each have. In between, you get some where there's limits on one or the other. But this has really been such a big driver of what's shaped the economics and competitive dynamics. In one sense, you have, an almost an oligopoly of just, limited supply and still the strong consumer demand. But where do we go from here? We certainly see an evolution in the regulatory frameworks as states evolve. They certainly have been doing things like adding adult use legalization or adding conditions that qualify as medical. Every state is a little bit of a moving target, but what most of these operators will often say, at least publicly, is that they hope for an environment where it's more like branded consumer packaged goods and that the brands really matter, if only for the stability of it and the relative amount of control that the brand owner has relative to just being more subject to the whims of regulators. Any one of those states that have a limited license arrangement now could open the door and see more increases. And Florida's a great example where there were some limits tied to the number of medical patients, but as sort of that and other things have grown, it's the limits are pretty meaningless now. It's a pretty rational market price-wise, and it has forced vertical integration that drives very significant margins. So it's attractive in a lot of ways, but you can't count on the limited license structure protecting you forever, basically, is the short of it. And so keep in mind, these are agricultural products that has a lot to do with how you think about branding. You go to the produce section of your grocery store, there's relatively little branding compared to the boxed and canned and packaged center store items. This is the world in which they partly live. Obviously, there's a big distinction between something like smokable flower that is simply an ag product versus gummies or chocolates or beverages or anything else that's got more of a value add. But what we look at is sort of these analog categories. And so we look at things like wine, beer, and tobacco for how it might inform, kind of where we're going. And you see something like wine that's very fragmented. There's brands that might be known with some consumer loyalty, but they tend to be small. The consumer really thinks about a lot of how they approach the category in terms of a particular type of grape or region or, these varietals. If you're at a restaurant, for example, you're typically probably looking for the Chardonnay or the Sancerre before you figure out, who's even making it or what, the brand is. And so that's a little bit of one extreme. You've got something like beer that lives what we think is in the middle, where you've certainly got big brands with loyalty, but also craft beers where, certainly they've been pretty disruptive and gaining share. And they often are similar to wine in that people look for a double IPA or a Gosa or a red amber or a stout. Like there's things that come ahead of the brand consideration in a lot of those cases. The other extreme is something like cigarettes or tobacco, where very high brand loyalty. You have consumers who, sometimes joke how loyal they are. If you think about somebody who's an addicted consumer, part of that addiction becomes the taste or the flavor profile, but if not only because you're so used to it. And so it sets up an interesting sort of world for where cannabis goes, because you definitely have some elements of maybe all of these, but like I said, I think, it's still very early trying to build that. You have some advantages with your value-added products like in edibles, gummies, vapes, etc. But even that, still has at some level some difficulty in truly differentiating your product. So we think it's going to take a long time to build equity here, but that's truly the end game. If you can achieve that, and for the brands who can stand out, it's really good to have that in your back pocket because it's portable. Back to California, it's interesting. That's one place where the price competition is tough right now, but that companies are interested in being exposed to the market, not only because of its size, but also because it's a springboard for brands, just historically across all kinds of categories. I mean, including, things like clothes or, fashion, media, entertainment. It's really been what sets the pace for the country and often even the world. Keep in mind too that in that market you have a differentiation between indoor grow and outdoor grow. The outdoor is where there's been quite a bit more of the price competition. It sets up perfectly the bifurcation we see, where you'll have some of this lower cost, somewhat lower quality type value flower that's going to be better suited for extraction and things like derivative products, versus the indoor premium and super premium that's better for the smokable flower. But back to regulation, it isn't clear, obviously, how or when something passes. We expect it to. It's just really when and what it looks like. But interstate commerce is a big piece of the equation that's likely to follow after that. It's in the Constitution. There's kind of really no way getting around it. I think the dynamics are going to be choppy. It won't be a smooth transition. These are state programs that were created almost always with the justification being that it creates jobs and taxes for that state. And so to remove that protection is a little bit of a tough sell. I think it'll probably be settled in court. This is so straightforward. It doesn't matter who's on the Supreme Court. I don't see how they don't clear the way for interstate commerce. I just think it'll probably take some time to get there. But how that looks is even a little bit unclear. Think about alcohol. You still have some very distinct and specific state and local rules. Think about like dry counties. These tend to have very small populations, but if you've ever Google a map of these, there's way more than you would ever think right now today. And so, how could states create protectionist measures to sort of get around some of this? They might be, stipulating ways that a product has to have certain characteristics to be sold in its state, so that it makes it expensive and difficult for anybody out of state to bother. Again, we'll have to see when we get there, but we do think there's centralized scaled cultivation that has a place. It's arguably the way you can make cheaper product. It's interesting. There's Curaleaf bought a facility in Colorado that looks like it's trying to set itself up for this. You've got even Canopy from Canada talking about how if they can't yet, under the restrictions of their U.S. listing on a major exchange, touch the plant, so to speak, in the U.S., they're considering buying facilities that they'll just leave empty until it's time to get the green light. They are desperately trying to be ready. They just paid $300 million yesterday for the right to acquire the Wana brand whenever that is. And so there's such an itch for these Canadian guys to get involved in the U.S. Canada's around the 10th of the size of our market, so that's why. But yeah, like I said here, they're looking ahead at this. Canopy's also done conditional deal to acquire acreage. Tilray has bought some of the debt of MedMan with options that set it up in a similar way, and Kronos and PharmaCann. There's some ways that I think are less inspiring where they've also tried to get creative. Tilray bought Afria, who had bought the Sweetwater beer brand. Honestly, I think it's really quite a stretch to feel like that's going to move the needle with your cannabis rollout, but they swear by it because they think this is a branding play. Good luck. But there's been CBD businesses that people have launched. Canopy owns a sports drink, even without CBD. Partly just because they want involvement and feet on the ground in the U.S. But you've got the guys already here who also certainly have facilities that would look useful in different ways in a post-interstate commerce world, but still can have some anchors. Trulieve and with the Harvest deal together have kind of hubs they're looking at where it not only serves the states they're in now, but could be used in a more regional way. And we touched on this already. This type of grow is what goes into your extract products and really not sort of a premium flower. So there's differentiation. There's definitely more than one way to win. Where does this stack up for the group and the stocks that we cover and look at? We see them kind of in three buckets. There's obviously the US MSOs who are here now, even though they would prefer the access to capital and the simplicity of nothing else, and of course the removal of 280E from a tax perspective. The regulations are keeping out bigger players that would otherwise be potentially taking share and giving them headaches. So they've got a nice moat. They're building infrastructure, sales, momentum. It's early, and like I said, it's hard to put too much sort of stock in it right now. But they're starting to build brands, and they're figuring out which ones to maybe throw their weight behind. All of that is still far ahead of where any of the outside players looking in are. And so we like names like Green Thumb and Cresco that way. The Canadians primarily operate in Canada. They have some operations in places like Europe or Israel too, but their way into the US just isn't super clear. Canada's got some pricing pressure now. They've got market share headwinds. It's been a tough market. There's a lot of volatility there. But the biggest players have had it tough. We're neutral on all of them, as you can see. That's a hold rating at some other banks. CBD, again, stymied by the regulations, and it doesn't look like there's really too much relief in sight there. So we're also cautious on Charlotte's Web. They seem to have an early start in brand building and awareness. They've shifted a lot of their attention to online sales just because it avoids the retailers having to worry about the regulatory environment from the FDA. But that's one where there could be an opportunity if that were to change. And then here's some highly important disclosures. Read those carefully. We've a minute and a half. I don't know if we can do a question real quick or if anybody might have one.
We do have time for questions. Any questions from the room? Any closing remarks?
Thanks so much for coming. Oh, yeah, go ahead.
Question. Is it illegal for the NASDAQ and in New York to list these companies, or is it just their decision not to do that? And then the second part, if you don't mind, as banks begin to creep into the space, I guess kind of holding their nose and lending, could the NASDAQ or New York agree to do this? Or again, is it prohibitive?
I think, so it's a great question. Our understanding is that it's a risk tolerance thing. It's interesting because IIPR is a REIT that's doing these sale leasebacks with a lot of these MSOs and owns the facilities where the stuff is grown. I mean, if that's not touching the plant, and they're, I forget which, but I'm pretty sure NASDAQ listed. So the lines keep moving a little bit. The goalposts seem to keep shifting. Clearly, the U.S. MSOs are not yet welcome, but it does seem like, especially if safe banking doesn't look like it explicitly clarifies this. But again, it's another step in the direction that could certainly pave the way. It does seem like it's really up to them. I think if they feel comfortable, that the SEC is comfortable, and that no one in the federal government's coming after them, et cetera, it could happen. We would obviously love that, because our bank would hopefully benefit tremendously. But that's, I think, where it sits right now. Well, thanks so much, everybody. Great to be in person, and appreciate the time today.
All right. Thank you very much.